Welcome, everyone. I'm Teresa Dunlap. I am the founder of Dunlap Bookkeeping and the primary pro advisor. I am doing these lives like every Friday night, and I wanted to take some time tonight to talk about how important categorization and proper transaction processing is for your bookkeeping. And something I see all the time with small businesses is the miscategorization of the transactions. And for most owners, they may not realize how unique every industry is, and even every business within that industry. And your chart of accounts should be set up in just the same unique way as your business. So when you do sign up for like QuickBooks, Xero, whatever software you're using, it will assign a default set of accounts for your chart of accounts. However, that doesn't necessarily mean that the needs of your business are getting met. And sometimes, even if you have somebody who is dedicated to your bookkeeping, they're only going to see the list of the accounts that QuickBooks or your software has assigned. And if they're not very savvy about the unique or different requirements that are within your industry, they may be possibly doing some harm to your business by clumping transactions that need to be separated into a clump, into one category. And that can be very misleading on reports, and it can cause you to have bad decision making throughout any period with your business. And you could be missing an important things about your business, like times that you're peaking, when to make changes, when to expand, when to borrow, when to spend, and expand your assets and things like that. All those things can be highly impacted just by something so small as miscategorization. So I have 3 industries that I'm going to cover tonight, and I think they represent a really good difference between how one industry can thrive on just those default general chart of accounts that are assigned when you set up your bookkeeping, and when that can actually be a challenge or something that could harm your business in your industry just through misaligned regulations and laws that apply to an industry. So I'm going to talk about logistics and transportation. I've had a really long career and background in that industry, so I'm definitely familiar with all the different components that go into setting up even just one transaction. It's such a vast industry that it touches every industry and every business in some, even a small way. We'll never be able to be without logistics and transportation for sure. The other 2 are retail, because I think that represents a really good industry that fits into those general charts of accounts and can function pretty well within that setup. And then legal, because it's very niche. There's definitely lots of different aspects as far as laws and requirements and things that a bookkeeper would really need to pay attention to if they were functioning within the books within that industry. So let's dive into logistics and transportation. So some key categories in logistics and transportation would be, of course, your fuel costs, and then your operation, and I'll dive into the third aspect here in a second. But I want to talk about fuel costs because, and I've mentioned this before, it's so important for a business to be able to understand which lanes are profitable and which lanes are going to be eating away at your profitability. And that's important. Logistics is not known for always having their communication on par, but if you understand how that's broken down and you're able to communicate very quickly and accurately with your clients and your partners inside of transportation, um, then that really sets you up for a great success and a really long time or a long-term successful business within that industry. And so I want to talk about other aspects like operations expenses and fleet management. And that can be fuel, it can be vehicle repairs, it can be employment expenses, and other things that really can impact your margins in transportation. So when you're breaking down transactions, you do want to have a separation of what is your operate. Like here's an example. When I was working as an agent in at Priority One Incorporated, I had a client that I used a digital dashboard, and I had to customize that and really get to know which carriers that were participating in that program were going to be the most cost effective for my client, for myself, and for Priority One's operations. And there was a separation of what was the actual transportation transaction and what was the operations who was managing the communication and the setup, as well as myself managing how the dashboard was and teaching my client how to create load requests on their own and track them and manage that information. So all of that really needed to be broken down into separate categories so that at the end of the day, as a like a 1099 contractor, I knew what I was getting paid, I was paying the operations, and what was going to the carriers. And of course, all of that had to be separated from the fuel costs. And that really helped me to understand how to help my client get access to the carriers that were going to be the most efficient as well cost effective. So I'm going to dive into retail. It's really quick. It's really easy to talk about retail because retail is really like a cash in hand exchange, like a product cash exchange, and it's very in the moment, can have very fast paced transactions that are generally going to go into a lot of those basic chart of accounts, like your POS purchases and the cash flow that's coming in through your bank transactions, as well separating your POS fees for having a third party manage that convenience for your customer, in which a lot of times customers don't worry about it because they really enjoy the convenience. I know I do. So along with merchants processing fees and keeping that separate from your revenue and your expenses, we're going to talk about credit cards. Credit cards, in my experience as the Do It With Me expert helping small businesses with their QuickBooks, credit cards is the one thing that I think gets misunderstood the most. And that has a lot to do with, it's set up in like a tier, and people think of it often like they would think about their own personal credit cards, how you would send out payments from your same bank account going out to separate, like different credit cards. However, when you're dealing with a business and business credit cards, those are set up with like a main credit card and then sub credit cards that fall under it, everything rolling up into the main card and making one payment to clear that balance. That can be very, very challenging for someone, even a bookkeeper that may not catch that could possibly be, the transaction won't be wrong necessarily if they're paying separately, but it can really create like a messy looking report. So, and those separate sub credit cards, even though those are all rolling up into one and all of that, their transactions have to have separate categorization because they might be managed by different contractors and different aspects of the business. Um, some of it may be involved in cost of goods sold. Some of it may be involved in billable income, things like that. That it's very unique to the retail situation. Most importantly, though, is for credit card fees and bank charges to be separated. That way you can have a very clean report and understand exactly what's the business revenue and expenses and what is more of your liabilities. And so I would say that in retail, credit cards are usually the one thing that's just generally misaligned in the setup and very misunderstood. With that, let's talk about the one that I really like to talk about, which is legal. I think it's such a neat setup. It's really interesting. It's so niche, and there's just some aspects of it that I think really take a specialized bookkeeper. So I have to look this up because I don't have it memorized, but I definitely know where to find it. IOLTA is such an important aspect for the legal industry, and that is a trust fund that is legally required for attorneys. I mean, they can lose their right to provide service and practice law if they've violated the categorization in their books. So it's very important for a bookkeeper or someone managing books to understand this. This is a trust account that's set up to manage and maintain the retainer fees and future funds that are going to be distributed on a or dispersed, on a schedule. And that is required by the Texas. It's under Rule 1.14 of the Texas Disciplinary Rules for Professional Conduct. And this is specific to lawyers. So the importance of this is to separate client funds that are held in the trust from revenue that is meant for the to go towards the operations and the fees of the attorney firm. And they must be tracked separately. The IOLTA is a liability account, so it is funds that are sitting there. If for some reason something changes, those funds they're sitting in a trust account, so that if in the case, according to the agreement, they do have to be returned to the client, then they have not been spent already, and the attorney can be compliant in that agreement. Another one is client cost advances, like court filing fees, expert witness, distribution costs paid on behalf of the clients. And these are all reimbursable, and they're not necessarily the firm expenses, but they are part of representing a client in a case. Retainer revenue, that's recognized when it's earned and not received. And as I was mentioning, sometimes these funds are held and they're on a distribution schedule. So the lawyers and the attorney firm will be receiving it, but they won't necessarily be claiming it as part of their business until it's been agreed upon. Unearned retainers sit in a liability account, like I mentioned, and that's until the point that they've been earned, whether that's a certain milestone or a case is won, lost, however that is broken up in the agreement. So things like legal research and subscriptions, Westlaw, LexisNexis, bar dues, they're all separate from general subscriptions. So you have to have categorization that keeps all of that broken up into a separate listing. We don't want to clump them together just as general subscriptions, because then you really can't explain your business in the appropriate detail. And there's all of those regulations that really could cause some trouble for an attorney. Paralegal and support staff wages, they're separate from attorney compensation and profitability analysis. So, that those are all, you also don't want to clump those together because they're going to be paid at a different rate. They're going to be paid different rates, different times, and depends on how the attorney's business and their firm is set up. Common mistakes that happen that I know are really important and affect the cash flow of a legal firm is the mixing of the trust funds and operating funds. And that's where I was mentioning, you can get an attorney disbarred if they're violating that. And it's just very important to have a bookkeeper that understands this niche industry and can keep all of that organized and separated. And then, of course, booking a retainer as income that's immediate, that overstates the revenue and really impacts cash flow. So attorneys want to be really careful about that and receiving their funds according to the schedule. Clients' costs reimbursed by clients recorded as revenue instead of reducing the receivables. I think accounts receivable is just that other thing, kind of like I was mentioning with credit cards. It's very hard to get somebody that's not just specifically in bookkeeping and accounting to understand receivables is like a middleman. It's an account where funds temporarily sit until they are brought together with their actual transactions. So reimbursements are a challenging thing in bookkeeping for the legal industry. So this is just a good example. I brought you these three industries, and they show a perfect example of how you could take one transaction and it can be categorized differently across different industries and have different categories that it should be falling into. So with that, if you are finding that your reports they feel confusing or the numbers don't make sense, categorization is almost always the root cause. And if there is any questions in regards to categorization and transactions, I'd love to answer. Message me, get in my calendar and take some time to ask questions. My consultations are always free. And I would love to be helpful in any way that I can to a small business that wants to have their books correctly done. And if you want help setting up your categories the right way for your industry, book a free consultation. As I mentioned, the link is in my bio and in the comments. And thank you everyone for watching. And next Friday, I'll be talking about a whole nother aspect and topic in bookkeeping. But I do plan to do this every Friday night live, and hopefully I'll see you next time.